So hello and welcome to today's 10 at 10, where we're going to be looking into a bit more detail in tax efficient directors payroll. So we covered a little bit of directors payroll yesterday, and today we're going to be drilling into it in a little bit more detail to really analyze the best way to get cash out of our business through payroll. Now, the first thing we want to do with directors payroll when we're actually processing it is decide, of course, on the frequency we're running the payroll. So you could choose weekly, fortnightly, monthly, annually. There's not actually a right or wrong answer as such, but what we would say is use an annual payroll to do retrospective adjustments to, say, a previous tax year, and use a monthly payroll to run your director's payroll going forward. This means your monthly management accounts are up to date. It's easier in admin time, and of course you can see your position and you can adjust for any changes to your tax code, etc. as you go along. Then we've got to decide the amount. So you may be having a predefined salary in mind of some sort. Say you want to earn £30,000. You could just run it all through payroll. You could just run it all through as dividends. But then again, why would you not use the most tax efficient option, which you can do with a tax efficient salary through director's payroll? Now, what we would say is the most efficient is taking the minimal salary, within reason, we'll cover that in a bit more detail, topped up by dividends. But remember that part salaries and part dividends is more beneficial than simply taking all dividends. Really important. We need to determine the minimum amount of director's payroll to apply to determine basically the maximum amount we can draw in the most tax efficient manner. Now, this is usually best decided based upon your tax code for a given tax year. So we're going to go into this in a bit more detail, but before we move too far, I'm going to explain some of the technical jargon that we're going to be using because you may hear them referred to quite a few times. So the first one is your tax-free allowance. This is the annual equivalent of your payroll salary, which does not incur PAYE tax charges. This is shown on your tax code. It's basically the leading numbers, and you simply multiply them by 10 to get your annual tax-free allowance. Now, another bit of technical jargon is what we call the primary threshold. This is the annual equivalent of your payroll salary, which does not incur national insurance contribution charges. So they're very similar, but ever so slightly different. Now, the primary threshold is not unique to an individual. This can be found via HMRC online, and it's one of these things which applies to basically everyone who's on a payroll scheme. So two slightly different things, both impact which tax code we need to choose and which tax efficient salary we need to put in place. But we'll look into how that's the case. So the first instance is basically we're going to decide on the amount to run through payroll. And the first question I'm going to ask is, do you have more than one director or employee? If you do, then you may be entitled to receive employer's allowance, which means you'll receive relief on the first £3,000 of employer's national insurance as of 2019-2020 tax year. This means if you have more than one director and more than one employee and you can receive employer's allowance, your most efficient annual salary will likely be based on your annual tax-free allowance. Unless, of course, your annual tax-free allowance is lower than the primary threshold. So what exactly do we mean by that? Now, what I am going to do is I'm just going to quickly share my screen with you guys so I can show you a bit of an example on this. Let me just share my screen. Let's play from current slide. Aha. So in an instance where we have more than one director or employee and we can get employer's national insurance, we're going to look at first example where, of course, 2019-2020, we have our full tax-free allowance of 1250L, and the primary threshold is currently 8632 for the full year. Now, if we times our tax-free allowance by 10, this gives us our annual equivalent, so the 12,500 for the full tax year. So we've got tax-free allowance of 12,500 for the year and a primary threshold of 8632. Which is the most optimal payroll salary in this instance? It's going to be our tax-free allowance value of 12,500 because we get all of our national insurance benefits, we maximize our tax-free pay, and because we don't have to pay employers national insurance, it actually works out relatively cheap because there's no additional costs involved with running the actual tax-free, the actual payroll at this amount. And of course, your admin time. That's it. Now let's look at another example. Similar situation, but this time our tax-free allowance is restricted at 625L. Now, there's a various number of reasons why a tax code might be restricted. Won't necessarily drill into that in too much detail here, but you may just see that your tax-free allowance is different to the maximum amount, in which case, simply times the amount by 10 to give you your annual equivalent of your tax-free pay. Now, in this particular instance, our tax-free allowance is only 6,250 for the full financial year. So not a lot, and actually you may notice it's lower than the primary threshold of 8,632, which is the really critical part here. Because whereas before our most optimal salary would have been based on the tax-free allowance, in this instance we'd be better off basing our salary on the primary threshold. Now the reason for this being is if we based it on our tax-free allowance at 6,250, we wouldn't be entitled to our national insurance benefits. Really, really vital part of payroll and one of the biggest benefits of doing it. So we want to capitalize on that. We want to maximize on that. You will have some PAYE to pay, but at 8,632, you won't have any employee national insurance or any employer's national insurance. So that's the most tax efficient salary in this particular instance. Now, what if you only have one director, but you have no employees? So you won't receive this employer's allowance, which means you won't receive the £3,000 worth of relief on employer's national insurance. Bear in mind, we're looking at 2019-2020 in this example. Now, in this instance, your most efficient annual salary will be based on the primary threshold, not on your tax-free allowance. This means you can still be entitled to your national insurance benefits, but without incurring additional costs and incurring additional PAYE charges each month. So we'll look at the same examples where we've got the same tax-free allowance, the 1250. The primary threshold is still the 8632 because we're looking at the same tax year. Times our annual tax-free allowance by 10, of course, we're entitled to 12,500. Now, because of this instance, we don't get employers' national insurance relief. If we ran out the full salary of 12,500, we'd incur additional charges because we don't get relief as an employer. However, the most tax efficient option in this particular instance is to take the primary threshold at 8,632 for your annual salary, because that way you're still entitled to the benefits, but you don't incur the additional charges of physically having the employer's national insurance charges applied to your payroll. Likewise, if your allowance is lower at say 6,250 and your annual entitlement is 6,250 and primary threshold is 8,632, still base it on the primary threshold because we want to maximize on your national insurance benefits, and there will be some PAYE to pay on this one as mentioned, but the PAYE charge is, in my opinion, and in most accountants' opinions as well, I'll tell you this as well, it's worth paying a little bit of PAYE to get the national insurance benefits because that's a huge benefit in the long run in terms of pensions, tax credits, etc. Massive, massive benefit. Just make sure you base it on the primary threshold. Now, really important. So let's look at another example because this is quite a common one. What if the company is actually loss-making? So the same approach won't work if you don't have enough retained earnings available, by which I mean we're saying that the most efficient option is to take minimal salary and top up with dividends. Important part there, minimal salary, top up with dividends. But you can't pay dividends if your company is loss-making and you don't have enough retained earnings because it would be classified as an illegal dividend, so you just can't do it. So if your company is loss-making and doesn't have retained earnings, you should be basing your take-home pay all as payroll rather than taking dividends, because there won't be enough profits to distribute after tax in order to declare the dividends. So you're restricted to what you can top up, I'm going to say, via dividends. So your most efficient option is to payroll your earnings, taking the absolute minimum dividends you can. In some instances, you might not be able to take any dividends. So just to point that out. Now, this may not help your loss situation, but of course, it makes a big difference to your tax obligations. No overdrawn DLAs, no nasty fees, and no illegal dividends. So really important. Using the same example again, we're going to see that our annual entitlement is 12,500 and the primary threshold is still the 8632. So nothing's changed, but the company is loss making. If we want to payroll ourselves, say we want £20,000 worth of gross pay. Now, we are going to incur some PAYE charges. We're also going to incur some national insurance charges. And if you're a company which doesn't get employers' allowance relief, we will have employers' national insurance to pay on this. So actually, in this particular instance, worth bearing in mind, the cost might not just be 20,000. The cost in this instance, if we get no relief, is actually an additional 1,569. This is for employers' national insurance. So the total cost in our P&L is 21,569. Same example, just realized I meant to change the 6250 to 12,500. Doesn't particularly make a difference in this instance because the next calculations are luckily correct, but just noticed that now. Say you want to pay yourself a little bit more. You want to payroll yourself £30,000 in a year. Now the cost is actually going to be a little bit higher. We've got £2,949 worth of employers' national insurance if we don't have any relief on this. So in these instances, it's just an example of if you're loss making, you have to payroll yourself. Just bear in mind, there may be some additional costs to your payroll. If you've got losses and you want to keep them closer to break even, just bear in mind, if you increase your payroll salary, you're going to have slightly more cost than what you first expected because of these employers' national insurance contributions. So that's some of the examples there. Now, I don't think I have any more examples to work through, so I'm just going to revert back to the standard meeting, if I can find it. Zoom doesn't want to work. Forget it, just carry on. Just carry on. So, next thing to consider when you complete a tax year is, say we've run all this payroll and based on whatever situation fits you best, we'll run payroll a certain way. What I will say is, when you come to completing the tax year, luckily we're a long way off for this one, but when you do come to that point where you've got to complete a tax year, review your year-to-date earnings before running payroll on April. So in March, we want to be looking at our payroll and make sure that everything is correct. Now, the first thing to check is that your actual year-to-date earnings for the current tax year are actually as you would expect, and make sure you aren't being shortchanged by just a few pennies. Now that sounds really, really, really daft, but it's actually very important because rounding, if you're running payroll monthly, might have dropped you below an important threshold. Really key here, because if you initially set your annual salary based on the primary threshold of, in this tax year, 8632, this equates to £719.33 worth of payroll gross per month. When this is multiplied by 12, actually, you lose a few pennies on roundings. So your annual equivalent at this exact point in time is 8631.96 if you run it at this same level per month for the full year. Just double check at the tax year, because this measly little 4p can drop you below the national insurance threshold and it stops you being entitled to the benefits. So 4p is costing you a heck of a lot more than 4p. Do please check, make sure you're not being shortchanged, and make sure your annual year-to-date equivalent puts you over the threshold you desire. And you can just basically adjust this in the final payroll. Quite simply, just add an extra 4p and it will bring you level. So nice, easy fix. Now, the other thing to consider when you run payroll is, do you also need benefits in kind? So have you got any personal benefits paid by the company? Have you got a company car? Have you got health insurance? Do you have any memberships paid for by the company itself? There's a list of different things it could be, but do you have anything which you're benefiting from personally, which you know the business is paying for? These will need to be declared as a benefit in kind. Really important you identify these, and you want to be able to track these per employee in your P&L so that you know who is entitled to which benefit and how much that benefit is in a given tax year. Really important, because these will need to be declared on a P11D and they may affect your tax code in the following tax year. Speaking of new tax years, when you do move on, just stop and check HMRC because they may have issued you new tax codes. And of course, the primary threshold for national insurance may also have changed. So what we need to review is, have these changed? Are there any new rates for any other items? Maybe they've changed dividend tax. Maybe they've changed primary threshold. Maybe they've changed the basic rate for tax. Really important because we want to actually identify any changes so we can react. Now, a good little website page for this is on HMRC itself. If you type in rates and thresholds for employers in the search bar and click enter, you can choose by tax year, and it tells you if things have changed. It tells you what the current level is for the primary threshold and, of course, the basic rate for tax, etc. Things have changed. Review our payroll, because really important here, items may have changed. 2018, 2019 through to 2019, 2020. Tax-free allowance has increased, as has the primary threshold. And of course, the basic rate has also increased, but there's no change to the dividend allowance. So we're still basically being taxed. We're still getting £2,000 worth of dividend tax-free this year as we were last year. But the year before, actually, that did reduce. So it's worth having a look just to make sure that we're adjusting payroll accordingly, because even though the thresholds might have increased, your personal allowances might not have, by which I mean your tax-free allowance may not have increased as much as you would have expected. In fact, actually, it might have reduced if you've put a P11D claim through, or if you've got benefits, pensions, any other form of income. This may have caused your tax-free allowance to reduce. So the question we now need to be asking is, should you increase your payroll in line with the primary threshold, or should you reduce your payroll in response to an unfavorable tax code? So what I mean is, have a look through the examples again in these instances and basically review each situation. Review the situation of your company, whether you get employer's allowance or not, and of course, whether you should base your salary on the primary threshold for national insurance contributions, or whether you should base them on your tax code to really maximize on your tax efficient payroll for your director's salary. Now, I hope you found this useful. It's a bit of a whistle-stop tour through the whole payroll process. Please do review your payroll if you're running it currently. If you're not running it, please do run it. Big benefits here. Make sure you're making the most out of your business. We want to maximize the cash you can get from your business in the most tax-efficient manner. But thank you for joining us today. And of course, if you enjoyed today's video, please let us know in the comments. And of course, if you have any queries, also add them into the comments as well. Thank you very much. And I'm good to see you all, and hope to see you all tomorrow for our next 10 at 10. Take care. Bye.
Hi, I'm Lisa.
And I'm Harry.
And we are Chartered Management Accountants from Caseron Cloud Accounting Limited.
If you enjoyed this video, please subscribe to our channel for more videos like this.
Click on the link below to join our free Bloody Brilliant Business Bookkeeping group on Facebook, where we are live every weekday answering questions, sharing stories, and building profit-generating businesses that put more cash in your pocket.
If you want to learn more, or you want to take a deeper dive into any of the topics we have covered, join the Bloody Brilliant Business Club with tutorials, workbooks, cheat sheets, and checklists which make it stupidly simple and brilliantly profitable to understand the financial stuff that you hate.
We'll see you there. Bye.
Bye.